players in the wealth space so-called, and we are going to introduce each one of us. Before we start the discussion, I'd request every one of them to briefly introduce about themselves, what they are doing, and then there are some specific topics that we want to pick their brain on, and we'll start discussing on that. Yoshi-san, first of all, with you, please.
Hi, my name is Yoshi. I'm the co-founder, CEO of Alpaca. I don't know if you know about alpaca. It's an animal in Latin America. It's a very fluffy, friendly animal, so please remember me about alpaca. Alpaca is a US, California-based stock brokerage company, and we are also SEC, FINRA, DTCC member, licensed clearing broker as well. So we focus on providing API for the businesses like broker dealers, banks, fintech apps to add investing products to their end customers. We currently work with about hundreds, a few hundred businesses across 30 different countries. So they offer stock trading, options trading, ETF investing, crypto trading as well, using our API. And then there are of course few companies we work with in India as well. So thank you for having me. Excited for the conversation today.
I am Pranit. I'm the co-founder and CEO of Univest. We are building the most powerful super app for stock markets. As we speak, we are the largest retail advisory for general recommendations in India. We have about 3 million odd users. Today, we are catering to 3 asset classes in capital markets: equity, futures, and options, where we provide trade research ideas, and people do pay us the subscription to kind of avail those services. As we speak, we are also launching our own brokerage in the next 30 to 45 days. Thank you.
Hi, I'm Swastik Nigam. I'm the founder and CEO of Winvesta. Winvesta is a cross-border fintech. We have 2 verticals. One is in wealth, which helps you invest into US stocks and ETFs, with the help of Yoshi's firm, for example. And the second one is in cross-border payments. We're very heavily bullish on India going global, and the idea that wealth is going to be a significant player, and Indian wealth going global is going to be a significant part of India's growth story as well. The cross-border payments is primarily for SMEs, however.
Hey, good afternoon. I am Manish Hingar. So first of all, thanks to all of you. Nitin has a stopwatch in his mobile, so we are very restricted in terms of time and everything. By profession, I am a chartered accountant. I have my own venture, Fintoo, that is into robo-advisory, yes, regulated by RIA from SEBI. 100+ team, champions, good champions. 2,000+ families, which we are managing. 4,000 crores of entire asset under tracking, which we have. It's a bootstrap, but yes, good company. Thanks Nitin for that.
Manish, let's start with you then. For the sake of audience here, now I'm assuming that a lot of people are not from the traditional wealth background per se. Now, we are going to debate the word wealth itself, during the panel. We all agreed for that this needs to be very carefully thought after. But give us a background, for the audience here, please give us a background of wealth as an industry has evolved in this country, or globally, whatever you're seeing, in the whole aspect of the where we are versus, where we will be.
So I think the session is about evaluation of wealth management. I personally say it's not evaluation. What I saw in last 2 days, the enthusiastic people and everybody here, I think it's a revolution. Evaluation where changing are happening in a gradual way, in a systematic, but it's not evaluation. It is something a revaluation. What we are going to see in next 2 to 3 years, I think it is unpredictable. What I see into this market, wealth management, let's keep it into 2 ways. One is the new people who are joining, new enthusiastic. 40 lakhs demat account every month, what we see into this market. 26 lakh crore rupees of equity area, which India is managing. 16 crores is demat total account, what we have as of now. What it's all about, these numbers says, I think, lots of new people are coming, and that give a nightmare to even banks, because people are not going to bank to do the FDs. And the best part, 41% new is coming in some of the, I'll say, a new asset class or a new thing that is more towards sectorial funds. So 41% new investment coming in sectorial funds. Quite riskier, but yes, that's the market. That's where we are. So one is the new people who are coming and joining the big fours. I think it will change the entire dynamics. Second, the existing. So I'm very bullish on it in terms of wealth management, Nitin. Starting from a person who is a traditional wealth management companies to today, what we see into this, in all these fintech enthusiastic people, what we see down, I think after 2 or 3 years, it is going to change entirely in terms of, so whatever existing people who are, they don't want only and only. So first, the services which usually ultra HNIs or HNIs are getting in terms of experience, in terms of analysis details and everything, I think now every affluent class is required details and everything. How to pay this, I think. You have to carry technology along with you to take it forward. So I see a big gap, and I see in a statement, push-based sales to need-based advisory that is coming in India. And we all have to be ready to take it. That's all, Nitin, from my side.
No, great. I mean, now you talked about some of the trends that are like shaping up from new customers coming up. So I want to pick Yoshi-san's brain about, you know, the carry trade, the Japanese yen trade. Now, our friends at Mint actually covered this story and brought this issue again back to light. But please tell us, you know, what exactly happened there? It was not wealth, definitely. It was a very disruptive trend, which was later probably copied by all the global hedge funds, you know, and everyone. But what exactly triggered that? How exactly it shaped up? And how is it going to define industry and all of us, you know, sitting in this room?
Yeah, because you know, I think I'm from Japan. I'm Japanese. My name is Japan. Like my company is a U.S. company. So I think that's why Nitin's like asking me about you know, Japan carry trade. But like we talk about this phenomena, I think like it was famous 20, 30 years ago. There's a investor called Mrs. Watanabe. I don't know if you have heard of it.
How many of you heard of it?
Watanabe-san, Mrs. Watanabe. Actually, it's not a person. It's a, yeah.
Yeah, how many of you have heard this trade, about this trade? Please raise your hands. Oh God, that's quite a lot.
Yeah, so Watanabe is like very typical Japanese last name. My name is Yokokawa, but like, you know, typical last name is also Watanabe. Yeah. So that's why it's called Mrs. Watanabe. It's actually Mrs. Watanabe is a group of housewives in Japan. Like in Japan, like usually, like, you know, used to be women really don't work, and they do work. They do a lot of work, like houseworks. And so, like, you know, they actually were trading a lot of FX because at that time, you know, the Japan stocks has been very stagnant, like, of course, like since it started moving, but like it's been very not moving for 30 years. So the only thing that, you know, we were able to trade is really like leverage FX trading. So like, you know, all these housewives, Mrs. Watanabe group, were trading so much of the dollar-yen trade. And most of the time, like, you know, Japanese yen, which is like Japan Fed fund rate has been almost zero or negative. So you can basically borrow that money for almost zero, and then basically put the money into like dollar, which were, you know, used to have like, you know, 5-6%, which of course like went down and came back up. So that was like basically how the Mrs. Watanabe got really famous. It was moving the dollar-yen, you know, currency pair price. So the carry trade is basically that, right? Like you borrow money from the currency that's really cheap, and then you put the money that gives you a lot of payment for the interest payment. So that's carry trade. And then I think that what the Nitin was talking about is that, you know, that really surfaced up, but like, you know, Japanese government decided to raise the interest rates, which is extraordinary thing. Because like, you know, we thought as a Japanese, interest rates was not supposed to move. And it actually moved to a 25 basis point. It's crazy thing. Now people think that it's gonna move. So like, you know, people are freaking out. You can borrow money with the Japanese yen, you can leverage it. So now it's coming up. But this carry trade has been done for a long time by this group of individual and retail traders. So I think like, you know, the retail traders, yes, they are new. And then like, you know, they are coming up the market, like, you know, as you can see in the movie of the dumb money. But like, you know, it's not something that they're dumb. I feel like it's something that's coming with the new ideas, and eventually, of course, like hedge funds try to manipulate that with the more levered money. So I think like, you know, there's always new trend when we are opening up the access to a lot of people for the trading and investing.
Great, thanks. I didn't know your full name actually. I just figured. Swastik, now this really carried on, you know, this trend which started like a few decades ago in Japan. We saw in the pandemic Roaring Kitty and, you know, many other sort of, you know, great traders of all time, you know, and while we are discussing here wealth, you know, this whole trend was so disruptive that it caught the eye of regulators and they tried to like intervene and, you know, catch that. Now, again, raise of hands, please. How many of you know about roaring kitty phenomena? It's very recent actually, so I'm disheartened that we are sitting in Bombay and not a lot of people are raising hand. But let's hear from the guru himself, you know. So please tell us.
How many of you have heard of the Reddit stock phenomena? Maybe that's more popularly. Okay, I'm glad to hear about this one. So, a little bit of backstory, right? We'll actually talk even of our personal experience during the phenomena. We started off in 2020, and 2 weeks into COVID, the biggest struggle of launching an overseas investing platform in India in the middle of COVID was everything still needed a wetting signature for you to send money out of the country, right? So as soon as we launched our business, it stopped. But then in January 21, there was a significant event. We suddenly woke up to seeing requests for hundreds of accounts, thousands of requests to open accounts. And this was the Reddit stock phenomena. A small group of almost, you could say, hobby amateur traders decided that when a really large hedge fund in the US had gone short the GameStop stock, GameStop is a small US company which has a very large cult following, they decided to do something about it. Posting primarily on Reddit about great stories of why this thing is so undervalued, and big capitalists are basically playing with this massive, beautiful cult, company. For a big reason, India is very big on Reddit. We all like anonymous opinions to be publicly stated, and that's why this caught the interest of a lot of people, which resulted in a wave in the media, which then resulted in more people just getting excited about it. And in 2021, the Indian markets were struggling. And everyone was at home, figuring out what to do with all the money that you're now getting, and beyond your 9 to 6 jobs. This was perfect because the US markets opened at 7 in the evening, right? So this was the struggle where you suddenly found that there's a small, but small investors, a very long tail of small investors trying to shake markets. We were excited about it, but the struggle, of course, was people were behind our backs to tell us, how can I just send the money so that I can be a part of investing into GameStop, which then became also AMC. And there was a long enough string of these really, really tiny stocks. It almost felt like Bitcoin, but real money, right? So that's exactly what this whole roaring kitty phenomena was. If you like it, like the idea of it, go and watch. I think there's a Netflix movie called Dumb Money, if I remember correctly. I haven't watched it myself because I've lived it, but yeah, that's what this was, and it was an interesting piece because it's the first time we noticed and the ecosystem noticed how small traders around the world are either tagging on to a global stock phenomena and possibly even propelling it forward.
Thanks, Swastik. So Pranit, coming to this and taking this conversation ahead. Now, as per capita income in India rises from $2,500 to $5,000, and if you have roaring kitties, you have Reddit, you have social media, you have Mrs. Watanabe, whatever trade you call it, if these are the phenomena which are like running in the back end, background, where does it leave us? Why are we in this session? What are we discussing here? And what exactly it means for the wealth ecosystem per se, So just keen to know your thoughts, and then I'll pick Manish's brain on that as well.
Perfect. I think that's a very wided scope topic, but let me break down that particular question into 4 parts. First is we'll talk about how the wealth management ecosystem is evolving and how it is expected to evolve as we move from $2,000, $5,000 today to about $5,000 per capita. Second is how the regulatory aspect is going to evolve. Third is about the diversification of products. Where do we see the wealth management products moving on? And finally, the so-called buzzword of AI. Is it just the AI, or is it going to be the blend of both AI and human mix, how it's going to evolve as per me, right? So let's start with the traditional part first. In the traditional part, what I believe is that earlier, this wealth management as a concept was earlier available to only the few of India, right? Which is the HNIs in the ultra HNIs. At a population level of 140 crore, where there are about 16 crore demat accounts, as Manish sir rightly said, there are only 3.5 odd lakh people which were actually having an access to the wealth management, so per se the PMS funds. But what about the rest? Which is the 3.5 additional crore unique users, the active users of India, who have money, who have more than 25,000 rupees in their demat accounts, but what are the wealth management solutions which are available? So that is how it is evolving. Like if you look at a decade going on from here, we are expecting about 600 million users to be a part of this growing middle class, which is $10,000 to $50,000 worth of actual per capita income. And there will be about 20 million odd users which will be a part of emerging affluent class as well. The focus has actually shifted over the period, and it is going to shift drastically in the coming years as well on this particular sector. The second part is diversification of products. We are the youngest country in the world, right? When we are talking about the youngest country in the world, we have the highest risk-taking appetite as well. And therefore, the emergence of other alternative products is also going to evolve. Unlike the traditional products, there are going to be a lot many alternative products which are going to be available, and you have to, as a wealth management company, provide a host or kitty of solutions for the users to actually diversify over there as well. Third is the regulatory aspect. Regulatory, if you look at, it has to shift drastically over the period. Because of the kind of technology solutions which are coming up, it is very, very important for the regulators as well, and they are doing so, by evolving in terms of giving some bit of freedom as well to the, the fintech companies, and at the same time, taking care of the investor protection as well, because of the lot many finfluencers, so-called, right, which we have already seen in the Reddit phenomena, right? So as to avoid those kind of things where people actually lose out on a lot of money, how do you evolve your regulatory aspect? That is going to be a big time challenge, which the regulators have to take care about. And finally, the most important part, which is AI and HI, right? AI, in my personal opinion, it is not going to be the entire thing, the entire wealth management will not be just driven by AI. It will be a kind of an enabler, it will be a kind of a screening criteria, but at the same time, the complex things have to be solved with the help of AI by the humans itself. So that is what I feel, that going forward it's going to be more hybrid versus just a single focused AI-based or human-based solutions.
So, I mean, you're referring to emerging wealth consumers and everything, right? So, Manish, help us understand, right? I mean, that's the evolution of wealth as an industry. Now, we are suddenly talking about uber rich, where, probably 100 odd investment bankers or private wealth guys were servicing them, to literally talking about like millions of users who will fall under that ultra sort of a rich, or let's say, emerging consumer rich categories, in coming years, decades, and so on. So how do we look at wealth as a definition itself, and is technology or use of technology an option, or it's not even worth talking about it right now? What are your thoughts on that specifically?
So first to, मैं स्वास्तिक पे अटक गया. Reddit, I missed Reddit यार स्वास्तिक, because मेरी वाइफ 7 बजे ना बर्तन धुलवाती थी. To be very honest, I missed this. I can't say anything more because she is sitting here only. Coming back to the point. So wealth, yeah, still I am here only. Yeah, for wealth, I'll tell you more about the advisory piece. Yep, definitely the services which ultra HNIs are getting. Nowadays, every affluent class, everybody is talking about affluent market. Everybody is trying to figure it out something to create some of the business model into that. I think first we need to understand the advisory. What's the mean of advisory? So what's the difference between an information and an advisory? If anybody can just say in a word. What's the difference between information and advisory?
Data action oriented.
Perfectly. Tailored approach. Information, generic for all. Tabiyat kharab hai, let's take a dolo into that. And something about that is tailored, personalized, sort of. That's, I think, the advisory came into the picture. And in India, it's, I'll say, very commonly used word about the advisory, but I think advisory is not cheap. We have to understand that part. And if you are going to give that type of solutions to a scale or a mass affluent class, We need to understand how we need to adopt the technology. And if I'm talking about technology, I'm talking about, you have to well versed about the technology, be it AI, be it today's data analysis, whatever, big data analysis, whatever name you will say. Some of the great example what we do, so we don't do free advisory. We charge a good amount of advisory fees. Thankfully, we are surviving in RIA, this market into that. But I'll say, to go into this market more deeper about the advisory, I think for any of the organization to cater these masses, I think some 4 or 5 things, starting from what first we need customer acquisition. How you can reduce your manual intervention and make it more AI-driven customer acquisition by filtering, by client profiling and everything, so that you will get the right type of leads or advice, whatever you want. Second, I think everybody is talking about customer acquisition, any of the startup. Everybody has a bigger number of their, I'll say, cash burn and everything about the customer acquisition. I think in wealth management, Nitin, the problem is not at all about customer acquisition. It's all about the retention of a customer, retention of the asset what customer has. Customer has exposure of 4 or 5 places. He is not investing only with you. He is investing at 4 or 5 places. If you can able to place yourself as a doctor, I'll tell you, people will not change doctor, they will change medicine shop. So that's the power of advisor which I am talking about. Customer retention is going to be the very big key in coming days' time. Whatever you see in the market, the differentiator is what? If I am talking about in India is too much mature to take all the advisory through IT, I'll say no. Still the model is physical, where there is some personal intervention required, backed by a sound technology. And if I'm talking about technology, your all wealth advisor or wealth manager should be so much decubed to give client a personalized approach. We know how complex is the wealth market in all together. Across all the different class, we have more than 1,000 of assets or something to show. If a customer who just needs something, okay, I need just equity, I need just debt or something like that, can I personalize the dashboard? I think it's possible through AI. I am a chartered accountant. Whatever I learn is from my big IT team into that. That's why. But you have to educate yourself to give client recommendation, to give all these Monte Carlo theory, whatever you can design, you can make it through your AI system. On the backend side, I'll talking about data centralization, where I think the biggest asset is data. Anybody, if you see the movie of BlackBerry, I think the market is changing. It's all about the data now. Data has a cost, data has a value. If you have a good data of a customer, I am telling you, you are sitting on a gold mine or something. Last one about the process automation, where we can reduce the cost. Mind you, because we are not working into ultra HNIs and HNIs, where the number of people are less. I think it is more towards the masses. And if I'm talking about affluent, that's a big mass which you need to cater. You have to adopt the technology along with that. Else, it will be very difficult to figure it out, where market is going, where my customer is going, what he is doing and everything. I think through AI and all these technology, you can able to figure it out. And Swastik, saab ghus gayi yaar.
So just, I mean, I'll include an interesting, sort of incidents which happened when I was a research analyst in my previous job. Now, institutional equities research is something similar to advisory. It works in a very funny manner that, we were actually not allowed to talk to customers or funds which were below $500 million, asset under management. And I'm sure you guys would have heard about it, that how uber rich and exclusivity of some of the quality advisory happens in the institutional part of the world. But now when we're talking about disruption coming in because of industry trends, retail, getting more smarter and everything, I'm keen to know from each one of you, how are you guys looking at, this opportunity, and how are you leveraging by, maybe including the best-in-class sort of advisory, to your retail clients by leveraging fintech or tech or just, the whole sort of space. So you want to start first?
Sure. So because we are clearing the house, we deal with the securities and cash custody. How I think about it always is that anything that financial services transactions happen when you're wiring money or buying securities, buying NVIDIA stocks, there's certain costs associated with it in the back behind the scene. And then the reason why it has been so expensive, and then that's why, like Nitin was saying, that like you don't want to be talking with the customers that has not much money, because unit revenue that you receive is actually lower than the unit expense that the company has to pay. And the reason why that was happening is that all those clearinghouse and the back-end infrastructure of the financial services actually rely on third-party systems and vendors. And usually those third-party vendors, name the company like Broadridge or FIS, like even IBM, those companies charge very high fees, like because it's a mission-critical systems. And because it's a mission-critical system, financial services company cannot cut off the contract. So average duration of the contract is around 25 to 30 years. So that is so hard to replace, which means the unit expense of the financial services doesn't go down, which means that in order to break that cycle, someone new has to come in to completely build something ground up. And then I think that's really started with the really birth of the rolling kitty, origination of that was the Robinhood. They started very ground up, build a system by themselves, so they will really compress the fees. And we follow the suit, we focus on building the behind the scene clearing stack from the ground up, so we don't rely on any third parties, which means the unit expense that financial services have to pay to us becomes close to zero, which means that the our partner broker dealers can offer the services almost to zero in terms of the fees, which means that now you can have the smaller users who can only buy 50 rupees of the NVIDIA without paying 50 rupees of the fees, but only paying, I don't know, 1 rupee of the fees, right? And I think this technology innovation is really the key. The fintech talk about financial services and technology, once it's combined, then finally financial services, if you look at the income statement of the balance sheet and the income statement of the financial services, it just gets completely revolutionized. And I think that's finally it's happening in terms of this evolution of the wealth management. And finally, we can get to those people who just only have really small money, but we can provide the access. And I think that's really the beginning of the evolution because we are finally inviting those people into the game. And then those Reddit happens, rolling kitty happens, and then those people with the per capita increases, and those people will have more power, right? So.
Sure, just a simple question to the entire audience, right? And we'll talk about, since Nitin is asking about the opportunity, let's see if there's an opportunity in this room itself or not, right? How many of you are trading in stocks or stock markets? Can you please raise your hands? Great, thank you. How many of you have actually traded stocks basis some friend's advice or some influencer or some, YouTube or anyone, right? Okay, a lot of them. Have you ever made losses because of your friends? Awesome, great. So yes, there's an opportunity, right? So yeah, I mean, see, look at this room itself, right? I know that quality advice should not be cheap. The advice should always be of high quality. But can it still be provided at an affordable cost of less than 6 or 7 rupees a day to the mass and the mass premium segment of the society so that they can also start making money? 90% of traders in India are actually making losses. 70% of intraday traders are actually making losses, even in equity markets. Now, if equity has been the highest returning asset class for the last 13 years in a row, where the CAGR has more than 13%, then why this is happening? Because of the lack of research which people don't understand or they don't tend to do. They don't have the time because they are, thanks to Swiggies and Zeptos of the world, with all due respect, I have a lot of respect for all of them because they have, completely revolutionized the entire industry. But because of the kind of convenience factor which is coming up in the country, right? Everyone wants convenience at the doorstep. यार ठीक है मेरे को वो रिसर्च यार कहीं से अवेलेबल हो जाए, वो अच्छा दोस्त है यार, वो पैसे बनाता है, उसी से पूछ लूँगा, खुद नहीं करूँगा, right? तो वो अच्छा दोस्त, that is what we think Univest as, कि हम क्या आपके वो अच्छे दोस्त बन सकते हैं, एक trustable, dependable दोस्त, जिसके लिए हम बहुत ही affordable cost आपसे charge करेंगे, and वो affordable cost करके भी we can become profitable, and yes we are. So yeah, that's how we are leveraging this entire opportunity.
I'll
Thank
actually
you.
plug in Pranit here. I mean, what we've done at Tavaga, we also actually started with something similar thought process. I mean, of course, there was a huge opportunity in servicing hedge funds and global asset managers. It's a very rewarding career, which I was very much part of and pretty much enjoyed while it lasted. But the whole idea was it was not gratifying enough. And somewhere down the line, I felt that this advisory is not getting democratized. why should the rich, who really don't have any problem, in my opinion, the uber rich are uber rich for a reason, there's no problem there for funds management and everything. Why the uber rich have a exclusive, sort of access to some very high quality advice. So what we've done at Tavaga, in very short, is we've used some asset allocation models used by investment banks to advise global pension funds, and we leverage fintech to roll it out directly to retail clients. So when you're talking about this, we are not differentiating between, you're investing 100 rupees or 1,000 rupees or 5,000 rupees with us. You're getting the same quality advice. We'll have to pay our fees definitely, but you're getting the same quality advice without differentiating. And that's where technology really helped us reach masses and, then make a difference. But Swastik, over to you, and we're running out of time, so I need to warn you guys, and we need to take a couple of questions also, so please.
Sure. I'll take a quick, page out of Pranit's book. How many of you have actually invested in international stocks? Great. How many of you who didn't raise your hands think, I wish I had invested in international stocks? Cool, right? So I think that's a point over here. I'll tell you what it was pre-2019, right? There was one broker in town. The minimum bar of being able to participate was over $10,000. You had to pay an arm and a leg to being able to do it, right? Then, of course, you had a lot of the India stack coming together. You had Aadhaar-based KYCs, digital KYCs. And the great part is when the great and sometimes the remorseful part as well, is when you're doing something cross-border, you got to look at two regulators rather than one. At the same time, however, if it's unclear if it's regulated or not, you need to look at neither regulator. And that's often where a lot of folks in the ecosystem try to play, leveraging the best of both very often. So what would often in that old world take a wetting signature, take up to 5 days to open an account, if everything was okay, suddenly became a 5 to 10 minute process. That you could get an overseas brokerage account quicker than you could get a domestic brokerage account, in effect, right? And that's the part about the innovation where you've taken what felt extremely difficult and because it was traditional in that way, and leapfrogged it into a new world. That said, remittance itself is still a very essential part of being able to participate. And that's found its own challenges. So what was a very easy way for you to actually open an account, however, still stays a struggle of you to go and fund it, right? I'm sure Yoshi has also seen these struggles, not just in India, but in other geographies as well, which are capital controlled. What we, of course, found is that the openness, however, that people recognize, hey, you're consuming products from companies from the West, why am I not participating in it, right? Each of the devices I've made are companies which are not domestic, for example. And that was what was the interesting insight where your consumerism started resulting in your taking a few actions to also follow through in the places that you're investing in. That became an interesting storyline in the way of how do you get someone to think about really investing? And I'd point to what Nitin just said about wealth tech, right? The country is not a singular homogeneous country. It's a combination of a Switzerland, a Germany, a United Kingdom, right? And further down all the way to even sub-Saharan Africa in parts of us, right? Wealth tech speaks only of the Switzerland of India broadly. And what a lot of the democratization has done is taken it all the way down to every mid-tier, mid-income earning country that exists in the world, but thinking of this in the microcosm of an India itself, right? And that's where this opportunity lies. As you keep on lifting, the tides keep on lifting, from a trickle-down effect all the way to the bottom, you will find that wealth is getting generated. There's also often a behavioral perception that I don't feel I'm wealthy enough to be having a wealth management account. It's a behavioral thing. And I think that's a very important part. You shouldn't think that you're actually engaging with a wealth management firm. You should think that I'm just investing for the future. And that's a much, much lower bar for anyone to feel rather than trying to think that this is a wealth tech.
Great. So, Manish, I mean, how are you addressing this problem at scale? So that's where the precise question is, because we are not talking about Switzerland right now. We're talking about India, So how are you solving the problem for India?
And we have to understand in India, we have Gujaratis and Marwaris also. So the one part, definitely technology is one thing which we should adopt. I think second is the knowledge that we need to talk about into that. Sometimes what happened, you are sitting in front of a client and client knows more than you. है ना? I don't know where he will find the time to do all these research and everything, but sometimes it happens. So I think perception is the biggest challenge for every of the startup, I'll say, or every of the person. Perception is your killer, I am telling you, in your growth. Because whatever perception we create from past, I think that is not going to be there in future. It has to be totally turned around. So adoption in our companies, I think IT, and we choose and pick very quality people in terms of their knowledge about their intent, so that we can give best in our advisory to our customers and everything. We don't worry about investment from where he is doing. We are just a doctor. We are just writing whatever recommendation we want to give, and thereafter it's his choice to take either through us or through somebody else. But I think knowledge and technology, if you, in fintech specifically, if these two things are with you, I think you are genius.
Great, Manish. Thanks. So we have time for just a couple of quick questions. So is there any question that audience has? So maybe I can pass on the mic. Can somebody just pass on?
Hi, good evening. My name is Ritvi, and I work with Nitin. That's a disclaimer. So I heard Swastik mention regulations. So in this whole realm, since 2022, how has regulations impacted your innovation? A quick go around to the panel.
Great, thanks for that question. I'll actually tag on a question on your behalf. It's also the taxation, right? So regulations are constantly changing. We've seen, when you try to invest overseas, you've got to do it under LRS, a liberalized remittance scheme. We've got a $250,000 per head per year that you can remit. That's great, but soon enough you find that the taxman comes and says, hey, I want my piece of the pie. We're going to do 5% tax collection at source, and then after a period of time you elevate it to 20%, right? So one has to, of course, be wary. India is still a very low GDP per capita country. It is the government's incentive to try to retain assets and domestically. It is trying also constantly to get flow and money coming into the country. That's great at the macro scale. At the micro scale, everyone wants to be able to make their own decisions independently as well, and you don't want to feel like you're being left out from the global economy. So it's this battle between, you could say, the regulator, the government, and you as the individual. That said, the regulator is also always constantly keen to see how the person at the lowest, at the bottom of the pyramid is not affected by helping. For example, we were part of an RBI sandbox in 2021, where we did the first cross-border UPI payments out of the country to invest into US stocks directly. It's another matter that didn't finally get crystallized due to a variety of different incentive structures, which didn't find its way in the regular regulations as well. But I think that everyone lives in, whether it's us as individuals, the government, or any regulator, unfortunately has some version of a multipolar disorder within our own beings, that we can't balance each of these things all at the same time.
Great. Do we have time for one last question?
Hey, hi Pranit. My question is for you. Okay, so I've used your platform, and the accuracy that you are giving for the short term and mid term and the long term stocks is more than 90%. So I wanted to know how you are leveraging AI. If yes, then how you are using the AI to give this much of accuracy, which is more than 90%. No other platform is giving right now.
Sure. So it is not 90 for all, but yes, for different terms it is different. Having said that, how do we leverage technology, if that's your question?
Basically,
there's
AI.
a process of screening and shortlisting. Like if I broadly break down the entire process into two parts, won't take much of your time because the time is already over. Screening part is majorly done by the technology. For example, if we are bullish on Nifty today or for the next 1 week and we have to give a positional call, then how many stocks For example, if we look at all the technical work, like 8 EMA is greater than 20 EMA, which all stocks results were better than the estimates, which all stocks are, for example, have open low formation on the daily charts, and lot many other these kind of things. Rather than this being done by all the manual people, by the human intelligence team, which is a part of the research advisory team, we keep it to technology itself. And technology dashboards helps us out of the 200 stocks which are available, roughly 200 stocks which are there in futures, we bring it down to almost 20, 25. Now, out of those 20, 25, there will be a lot many people who are looking at different sectors, and they'll be coming up with the recommendations for this particular viewpoints on those particular 20 stocks. And then we finally come down to this zero down upon the right thing. So that is how it works. Like the screening part is majorly done through technology, so that less time is involved for the human intelligence team and more scope of stocks are also covered. So yeah, that's
Great. So I think we'll have to stop here. Now, somebody termed on Twitter the global fintech as the Eras Tour equivalent of finance for finance bros. So I think I'll wear it with a badge of honor, you know, that really this session and the whole fintech festival has been really great. And this video is going on my LinkedIn also as the Eras Tour of finance bros. So thanks again, everyone, for attending. And thanks to all the panel members for your time. Thank you.
Interesting panel and the discussion that we just had, very interactive and very informative.